Z gains on the news that will be reinstated in the F&O segment. Contracts for May 2023 will now be available. Meanwhile, Citi also announces invitation of claims and corporate insolvency resolution process.
Cipla's under pressure. It's one of the top losers on the Nifty after the US drug regulator issues 8 observations for its Pithampur facility. The plant was inspected between February 2nd to 17th.
Vedanta falls over 6% after bond yields of the company surged to 35% on Vedanta Resources. The street fears a default at the promoter end.
Hello and welcome to Chartbusters. I'm Nigel D'Souza and joining me as always is Mangla Malu. Well, for today at least, you're seeing a bit of a fight from the bulls from lower levels and the ingredients were in place. Yesterday, you saw a bit of a short covering bounce that played on the Nifty Bank. And currently we're seeing the Nifty Bank as well holding in the green. Remember, today is the Nifty Financial Services expiry. And the bulk of the contribution comes in from the HDFC Twins and ICICI Bank. That's close to around 60% odd. So if that has to play out in favor of the bulls, then the Nifty Bank as well could show some traction. And that's precisely what's happening. On the Nifty as well, we're up close to around 20 points. At higher levels, we could expect some supply. But I think the ingredients are in place to see a bit of a relief rally. Whether it happens today or tomorrow, well, time will tell. But for the time being, that 17,300 odd mark, which we held out yesterday, that is likely to hold out at least in the near term. But let's get in Shilpa Raut, who joins us to run us through her view on the markets. Hi, Shilpa. Good morning. What's your view, Shilpa? At around the 17,410 odd, what would the fresh trade be and how would you approach the Nifty Bank?
Good morning, Nigel and Mangalam. Coming to the indices, let's talk about Nifty. Nifty, we see 17,400 straddle is very aggressive. Both side call and put, they are aggressively adding up positions. So any sustenance above 17,400 will see a short squeeze and the upside momentum will lead towards 17,600 zones. Coming to Bank Nifty, we see that 40,300 put is having the highest number of fresh OI additions as of now, whereas 40,400 and 40,500 call writers are also very aggressive. So the range is very tight, but any sort of sustenance again above 40,400 on Bank Nifty, you will see the upside rally extending towards 40,800 to 41,000 zones.
All right. So that's about the indices. Individual stock, Shilpa, what do you have on your radar for us today?
I have two buys. One is Godrej Properties. Godrej Properties trading at around 1110 zones now, has a very strong support at 1090. So that should be a stop loss and you should look for targets towards 1145 to 1160. The other one would be a buy in Coromandel. Coromandel also has given a brief breakout above 900. So sustaining 900 zones will see the rally upside towards 930 zones.
All right, Shilpa, thanks a lot for that. With that, we shift focus to our special coming in from Money Control Pro. Ideas for Profit. Our colleagues joined in. Neha Dave has a stock that she's been tracking.
Today's stock idea is IDBI Bank, which is in the news for impending divestment deal. IDBI Bank has significantly strengthened its balance sheet and improved its profitability over the past few years. In the last quarter, that is Q3 FY23, the bank reported a strong earnings growth, which was driven by healthy growth in advances and expansion in margins. On the balance sheet strength, it gets reflected in the deposit franchise of the bank, which is large and strong with a CASA ratio of around 54% as of December end. In terms of advances, the bank has been mainly focusing on the retail lending and has reduced its corporate exposure. The retail advances have increased to around 67% of its total advances book from around 51% in March 19. In terms of asset quality, the overall riskiness of the portfolio has significantly reduced. Gross and net NPA ratio has been trending downwards. Slippages have declined. Restructured book is contained, and special mention accounts, which are an indicator of early stress in the books, have also fallen. Moreover, the bank has significantly improved its provision coverage ratio, which is almost 98% as of December end. Talking about the valuation, the bank is currently trading at around 1.3 times book value estimated for FY24, which is reasonable considering that return on asset has inched above 1% and return on equity is around 15% in the first 9 months of FY23. That said, the bank's valuation will be driven by the impending divestment deal, and any delay can be a risk. Nevertheless, long-term investors with a time horizon of more than 1.5 years can start accumulating the stock in a staggered manner.
Welcome back. The frontline indices are shuffling between red and green. Started in the green, now mildly in the red. Nothing really to worry about. The mid-cap index is doing extremely well. Let's talk about one of the stocks on our radar that we have today. We have Tega Industries. This is because the company's recently got the NCLT nod for acquisition of McNally Sayaji Engineering. We have with us Mehul Mohanka, who is the Managing Director and the CEO of the company, to discuss this acquisition in detail. Thanks a lot, Mr. Mohanka, for joining in. The first question is, what is the kind of cash that you are laying out for this acquisition? Are you going to subsume any debt from this as well? And at the same time, what could the revenue potential of this current plant be?
So, as per the resolution plan, I think the approximate amount of money to be paid towards the resolution is about 165 crores. And there is no debt being assumed. As per the NCLT process, the entire debt gets extinguished from the company as per the NCLT order. And the transaction is being financed through an optimal mix of debt and equity from our side. The business is, as of today, from what I understand, with the access that we have gained so far, is in the black. It's unlike other NCLT companies. It's currently not losing cash, and it's on a good path to grow quite optimally over the next few years.
Okay. All right. Hi, Mehul. Good to speak to you after a while, and congratulations on this acquisition. Give us a few more details. You have told us the amount close to around 165 crores odd is what you're paying. And you're saying that this firm is profit making. So that's good news. But how much of money do you need to put in to get the plant up and running? Or you're happy with the way it's running currently? So what is the capex you'll incur, if at all? Point number one. And at peak, what kind of revenues do you see coming out of this plant? Say in FY24, FY25, you'll have a strategy in mind, right?
Yes, of course. So first of all, just to explain a bit of the transaction rationale before I get into the numbers in specific, I think what's important to understand is what this business does for Tega in general. And it's a backward integration for us. McNally Sayaji, which is a subsidiary of the parent, is in the business of manufacturing mineral process equipment for the global mining market. And it's a great fit for us because from a backward integration process, it allows us to also supply our mainstay aftermarket products to the equipment on a captive basis, and also helps us grow not only the equipment revenue, but as well as on the services side. So since we are already in the mineral process plant in a mining industry, it just brings more product lines for us to work with when it comes to approaching customers. In terms of revenues, we see, again, it's too early for us, in the day to be able to really clearly project out what we're looking at in terms of growth. But I see a healthy 15 to 20% growth over the next few years for this business to deliver. And I'm sure as we guide the management into new territories and new products and services, we'll be able to ramp up the revenue significantly along with margins.
Right. Just the last few bits on this before we go on to the other parts of your business. Mr. Mohanka, just wanted to know what was the exit run rate of the revenue when you acquired it? And you say you can grow it around 15 to 20% sustainably. And you said it's a backward integration for you. So, how much better would your operational performance be because of this?
So, we definitely see a revenue potential upside of about 5% if we were to supply all our products to the new target on a captive basis. This, of course, can change on the product mix of the target going forward. The exit run rate was about close to 10% from what I understand from the previous year. And we're looking at bettering that going forward.
Okay, all right. Mehul, let's talk about business on the whole. I recall when you joined us the last time around, you were talking about gross margins improving to, I think, closer to around 60% odd. Has that happened? If you could tell us that. Your EBITDA margin guidance, I think, was in that band of around 21 to 23%. Both on track?
Yes, year on year, I think we are at roughly 21%. If we look at December, year-end December 22 to year-end December 21, that's come with a healthy mix of not only volume growth of about 17.6% and a price growth of about 5.6%. So pretty much on track where we look at, overall year-on-year growth has been close to 24%, while we've been saying that, we look at the year to end at about 15% CAGR. But I think we are pretty much on track to achieve that, if not better. You're
telling us that you would grow at 25% this year. So you've done 24% already. Seems like 25% is, a given for FY23. Having said that,
just to correct you, 25% was on Dynaprime product line.
Okay.
On a business as a whole, we had said 15%. So, it was a quarter-on-quarter phenomenon, but it'll ease out. But we see that though we've given guidance about 15% is a CAGR growth for our business, I think we will top that in this particular financial year.
So then Dynaprime, you've done about 165 crores this year. What's your target for next year in Dynaprime? And will this run rate continue into Q4 as well? And your thoughts on the overall revenue growth for FY24?
Yes, absolutely. So we see Dynaprime again on track from a growth perspective. We had given an estimate of a CAGR of 25%. We will surpass that. And as well as on the overall financial results, though we've maintained a CAGR of 15%, we will also beat that on as we end the year in Q4.
All right. And Dynaprime next year does what? Around $100 million?
So we've been saying that Dynaprime will continue to track at about 25% CAGR year on year. And, though it goes through quarter-on-quarter movements from, trials to conversions to orders, I think we will maintain that run rate over the next few years, if not better it.
Okay, so for FY24, what will Dynaprime revenues look like?
So from where we end at this year, again, I think you can improve that by another 25% on a conservative basis, ranging to about 30%. I think is where we're looking at the business.
Right. So you've done 165 crores for the first 3 quarters of this year. Assuming that run rate continues, you end up around 210 odd crores this year on Dynaprime. We can assume 300 to 350 crores for the next year, right? Just plugging in those numbers.
Approximately.
All right. Always a pleasure speaking with you, Mehul. Hope to speak with you soon as well. With that, we'll wrap this conversation. That's the management of Tega Industries. The next, the kind of acquisition that they've made for 165 crores can aid their revenues by about 5% give or take all the other things. But they are looking to improve that business by about 10 to 15% to the stock off the lows. Take a short break, come back, and we get you more on the markets and individual stocks.
Well, the markets have moved lower as we speak. We're moving back towards the 17,360 odd mark. The Nifty Bank has taken a bit of a pullback, but let's see whether or not we get a bit of, a pullback from these levels. From higher levels, we've corrected close to around 80 points odd. But Zee Entertainment, that's the stock in focus. Vivek is with us to run us through why exactly that stock is excited in trade. Vivek?
Well, absolutely right. So, what had actually happened was that the NCLT had admitted Zee under the IBC on Feb 23rd. So, on Feb 23rd, there was a notification from NSE saying that, 2-month forward contracts, or basically what they intended to say was that Zee would be excluded from the F&O derivative trading segment. And the other thing that they said was that there would be a 100% upfront margin requirement in order to trade in Zee future contracts. So yesterday there was a notification that basically withdrew that circular. This is after the relief that Zee got from the NCLAT regarding the entire case that is going on between Zee and its lenders. So, what basically means is that Zee is back in the F&O space, so May contracts can be actively traded. Also, the margin requirements have now gone away. So, it's a significant positive, and it's a technical positive as far as Zee is concerned. And clearly, the stock is cheering this particular development as well.
It is, Vivek. Thanks a lot for that. Meanwhile, what's not cheering is the market. Actually, it slipped a little more from, the levels that from where we started the show right now. In fact, ITC is the one which is at the low point of trade, a heavyweight on, the index. It is currently sitting with a cut of almost, close to around 4.5–5% from its record high that it hit 2 trading sessions ago. The other one which is actually pulling the index down is also Reliance. So give or take a few points, the Nifty is meandering around that 200-day moving average. So whether it takes support from that levels once more or not is the big question. And for the broader markets, just keep an eye out on Paytm. That's the one that has been, making all the news over the last couple of trading sessions. And now there's a steep sell-off out there. Paytm is down 7% in today's trading session. It had seen a bit of a rally from the start of this month, but from higher levels, it has been seeing some bit of sell-off, currently sitting below that 600 mark. With that, we're out of the time of this edition of Chartbusters. You stay tuned to CNBC-TV18 as Trading Hour comes up next.